Alright, so today, um, I wouldn't say it was a bad day, but today we took no trade. The market took our liquidity, the thing we be like first confluence we wait on, but I still didn't take a single trade. Most traders probably forced entries today and probably lost because I would show you why you wouldn't really win any trade, and I'll show you like there was no way to take a trade, right? If you were trading gold, I don't know about S&P 500 because I don't trade that. I might get into it later, but as a beginner, not really a beginner, I started 6 months ago, but as someone new, I want to be at one pair as of right now, from because that's what the person who taught me told us, to just trade one pair so you're not just confusing yourself, right? So coming into the session, first, of course, we mark out Asia high, London high, London low. The reason why there is no Asia low, because if you remember from one of the last videos, we don't mark out the key point or the low or the high if it's already taken out. So as you can see, Asia low is already taken out in London session, so we don't care about that. And if you could see here, liquidity, it was already taken out. Like this low, it's already taken out in London session, right? So I needed to find more key points so I could use as a liquidity sweep if it happens. So I used 1 hour lows, these ones right here, right? Because the market just kept going down and I don't know, I didn't know what to do. So that's why we marked out 4 hour and 1 hour lows. This 1 hour low and then this 1 hour low is where it takes out the lows and then did a reversal. So that's why if the session highs and lows are already taken out, make sure you use 4 hour and 1 hour low. That's something we already checked, and the reason why I'm all the way down here, because everything right here is already taken out and we couldn't really see nothing. So we got this low and then we got this low. This low is the same as 1 hour and 4 hour, and after taking out this low, market is a reversal. Most likely I feel like it's still gonna keep going down tomorrow. We'll see what it is. So after every confluence marked out, you could see here liquidity does get taken out. Market starts doing kind of a reversal, but let me show you why we didn't take no trade, because I was looking at the charts the whole goddamn day. I was sitting on the charts until like 11 a.m. for me, and then we don't trade for 11 to 12 a.m. for my time, because that's when Wall Street or people up there has their lunch break, right? So right here, I thought, okay, cool, it's gonna be a reversal, but you don't get no key point. One of our first key point is a break of structure or inverse fair value gap. You could see right here, you could have used this break of structure, but no, it doesn't even happen, right? We could use this, but then a break of structure happens. Where is your fair value gap? You don't got nothing. You couldn't even use EQ, because let's say we went from this high, this low to here. It doesn't get touched until here, and then I don't know, just the market was just going sideways. You can't find a single trade here. It starts going down. I was like, okay, it might be a continuation. We get an inverse fair value gap, a little whatever, but then okay, we get this fair value gap, right? We probably got another break of structure, but then if you targeted these lows or something, you would just get stopped out, because market go a little bit down and then start going sideways again and then goes up for a little bit, down, sideways. It was just some stupid thing today. I mean, it's end of the year, so probably almost like these stocks will, not stocks, these pairs or whatever, right? they will not be that great. So I wouldn't say look out for trading, but actually sit on the charts so you could analyze and see what's going on, because you need to be knowing like how to know when to not trade, because no trade is also a trade. And then you still have to journal. If you took no trade that day, put no trade. So that's about it for the video. um Days like this does protect your account. If you can master patient on days like this, consistency become possible, right? Because let's say we put a trade here randomly without, because some people, I bet you, because I did this before when I started, I bet you if you didn't find a single trade here, you would have just pressed buy or sell at one point, like buy up here or sell up here. I know you would have, and then you got stopped out. Don't ever do that. I know it's gonna take time, but don't ever do that, because you're just gonna get stopped out. Because if we put sell here, let's say my stop loss was like somewhere here, it would have been stopped out, or I would have just went waiting until here, and then you're just stopped out, right? And that's, mind you, that's at like evening around like 5 or 6, and we don't even trade at that time. So it would have been like a stupid trade to take. So that's why when market is going sideways, know when the market is going sideways. From this high, it barely exit out this high to this low. That should tell you the market went sideways. From here to down here takes out liquidity, up down, just same thing until here. That's Asia session right now. We don't trade that, but whatever happens there, we'll see tomorrow in the morning. And then, as you remember from the last video, if you remember, we was somewhere here. I showed you inverse fair value gap, and then I was like, market will go down for sure. And then that's exactly what happened. So whoever took that trade, if you did, you probably made some money. I believe it was this inverse fair value gap I seen yesterday. I was trying to explain what an inverse fair value gap is, and then yeah, I did. I mean, there is a trade. Let me break down S&P 500. Let's go check if they took a trade. Oh, I already broke it down. I think I was looking at it in the morning. Okay, let's see. I'm gonna just break down this for y'all so you'll have like another point of me, like where I'm back testing, right? So we mark a high, we mark out the low. Asia session, it does get taken out, you don't need to use it, but I just marked it. Asia high was this, Asia low was this, and then you check 4-hour highs and low right here, kind of the same thing. This gets taken out. Let's see the 1 hour. Y'all need to be back tested too, because I did this so much, and this is one of the best ways you learn. See, session highs and session lows be the same as 1 hour or 4 hour, like most of the time. See, this one is the same, this is the same, the high is the same. Let's go to the 5-minute chart. New York session opens up. It takes out these lows, goes to these lows, yeah, and but the market is still choppy. But let me show you how you could have taken this trade, right? So first of all, you get a breakup structure here, you get this imbalance fair value gap here, market gets touched, right? Respects the fair value gap. After that fair value gap, you look for another breakup structure or inverse fair value gap. You got this breakup structure here, and also inverse fair value gap. This should be tripping sometimes, but this imbalance or whatever here is your inverse fair value gap, because this candle makes inverse fair value gap. If you remember from the video yesterday, if the candle closes under or above it, that makes an inverse fair value gap. So your three key points are hit, and then you could have took this trade for 1 to 2 RR. I would have placed the stop loss above this fair value gap, and then it shows you where your 1 to 2 RR is. So until here, that's probably like, for me on a $25,000 funded account, that's like a 360 or whatever dollar trade if I did take it. But like I said, I don't trade S&P 500, so I wasn't looking at the chart. But if you did, you would have traded you could have took this trade, and then you could have, since it did a reversal, you cashed the reversal, you could have took this trade, break of structure. Here, your fair value gap, it gets hits twice, here and here. Go to the 1 minute. Trading is simple if you make it simple. Break of structure here, you put in a trade. Let me go to the 5 minute. Okay, we have a break of structure here, so you put this trade in, and same thing, I'll put the stop loss under the fair value gap. And you go for 1 to 2 RR, or you could target these highs up here. Target these highs. That's what, 1 to 5, which is good for you. And yeah, this is a good trade. So during New York session, you could have taken 2 trades in S&P 500 if you trade this. But yeah, for gold, it wasn't a good day. It just went sideways. That's about it for today. Yeah, that's about it. Just make sure y'all do back testing and trade every journal every trade. Yeah, that's about it. Just make sure you like the video, subscribe, and let me know what else y'all want to see.